What's up you guys, I'm Dan, this is Frugal Not Cheap, and today we'll talk about Tesla insurance. So Tesla is a lot of things besides just being a car maker. It's also a software company doing a lot of great work with their internal software and also with AI. They also produce energy storage solutions like Megapack and Powerwall. How could I forget FSD for software? Actually, that one's pretty awesome. And they've even moved down the supply chain, or kind of upstream, actually on the supply chain for batteries. And they're even opening up a lithium refinery here in Texas down at Corpus Christi. But as if that's not enough, they also do offer insurance in 12 different US states. This seems like a good move, as if they ever get the robotaxi fleet thing going, then they're going to be one of their largest own customers. And this will give them a whole lot of data on, well, I think they're learning a whole lot about repairability, a really great feedback loop between design and then repairability and insurance and all those things together. In any case, the states where Tesla insurance is available in alphabetical order are Arizona, California, Colorado, Illinois, Maryland, Minnesota, Nevada, Ohio, Oregon, Texas, Utah, and Virginia. You see an asterisk there for California because California is one of the weird states that doesn't allow them to calculate the insurance premiums based on driving behavior. So yeah, California, man. I don't know, real mess out there. But here in Texas, it is allowed. Sometime after I moved out here to Texas, I can't remember when. I think Texas was one of the pretty early states that they launched in. But in any case, I did price out Tesla insurance to see if it would be competitive. And it just wasn't competitive against the policy that I had with Geico. But what ended up happening actually is after my accident, there were some issues with Geico, and they said that they wouldn't be renewing my policy moving forward. And so I was forced to go and look for somebody else. I did price out a policy with Progressive, but it was very, very expensive. And there are other smaller insurers out there that had some better quotes, but I wanted to be more comfortable going with someone larger. And I figured I'd give Tesla a shot. So just like with buying a car, which is really easy with Tesla, you just go on the website and you order it. They also make signing up for insurance quite easy. In this case, you don't do it through the website, you do it through the app. And so yeah, it's pretty cool. You just go in the app, put in your driver's license and some other details, and it prices out a policy for you. I made sure that all of the coverage limits and everything were what I needed and comparable to my previous policy. And of course, the nice thing is it already knows which cars you have associated with the account as long as they're Tesla vehicles. They can insure non-Tesla vehicles as well. You just have to add those. In order to do that, if you already have a policy with your Tesla, and then maybe you go out and buy, some other make, then you just have to reach out to Tesla in order to add the vehicle. So that part's pretty cool. Tesla always makes transactions relatively frictionless. In fact, I remember just how crazy it was when I paid the $5,000 to upgrade from enhanced autopilot to full self-driving, how frictionless that transaction was that was so large. Anyway, in all of the 11 states, so again, California is the 1 out of 12 that doesn't allow real-time data to influence your premium. In all of the other states, your premium is based off of what's called your safety score. They are on version 2 of the safety score, and this kind of idea might not be all that unfamiliar to you. I know a lot of the other auto insurers already have something like that. I think with Progressive, they send you a device that you put in the car. With Geico, I had similar telematic-based discounts to my policy, and this was basically just using an app on my phone. With the Tesla, of course, though, the car is the device and app, so there's no need to have your cell phone or anything like that. Your safety score is always going to be calculated just based off of your driving. Now, when you first sign up, regardless of whether or not you've been using FSD beta and therefore had already a safety score in the system, it's going to start off your premium based off of an assumption that your safety score is going to be a 90. And then as you drive, of course, your safety score will update, and then in future your premium will be adjusted to match your safety score. So safety is not the only factor, of course, within calculation of the premium. Other factors include how much you drive based on your mileage. It projects out how much you're going to end up driving per year. Also, which car you have, obviously. Where you live, what your coverage limits are, and how many vehicles you insure. I assume they have some kind of volume discount. So now we'll talk a whole lot about the safety score, because really that's the key thing, right? Like everything else is pretty standard in terms of coming up with your premium. But I'll say right off the bat that I've always, since the beginning when I first signed up for FSD beta and tried to keep my safety score up in order to be eligible for the beta, it's always been a challenge to get my score up real high, whereas with the Geico app, I had a very consistent score of the low 90s, and so my premium was always discounted compared to if I wasn't using the app, and it was great. But there is a very specific reason why, and it was because of my particular usage pattern. So first, let's talk about some of the factors which are not specific to me. So the first one we should talk about, and I'm sure you had this one in mind, is speeding. So this was introduced in Safety Score 2.0, and they now have an excessive speeding thing where if you're driving at above 85 miles an hour, then that will start to ding your score a bit. The great part though, being a Tesla driver, the most fun thing that there is to do isn't to go from 85 to 100, which, you know, I don't do. It's not really legal out there. But the funnest thing with the Tesla is to go from 0 to 45 or 0 to 60, you know, depending on where you are. It's that initial, that incredible torque that we have using an electric vehicle. That's really the fun part, and that is not going to impact your safety score at all. So you can do the red light thing as much as you want, and it's not going to hurt the safety score, at least as of the current model. Next, we've got aggressive turning, and I do think you know, it is a little bit picky about this one. It estimates the amount of g-forces that you're experiencing laterally when you make turns, and if it goes beyond their threshold, I think it's like 0.4, so you know, 40% of one gravity, then it'll start to ding your safety score. And yeah, I find that when you're taking a lot of like 90-degree turns, or just there's a lot of scenarios where you're easily gonna do that, so you kind of have to drive a lot like, you know, like a grandma in order to make sure that doesn't happen. Then we've got unbuckled driving. Of course, that's going to hurt. I've never done that. Like, just an instinct to always put the seatbelt on right away, and they do save lives, so very important to be wearing those. Then we have forced autopilot disengagements. If you're just not paying attention, then that's definitely going to ding your score. Another kind of unique one, this was not a factor that, to my knowledge, with Geico, is late night driving. They have updated the way this works so it doesn't penalize you as much when you're kind of driving on the tail ends of the night quote-unquote night period. So this is from 10 p.m. to 4 a.m. but it's kind of, again, it's weighted by time, so if you're driving between 10 and 11, it's not going to impact your score nearly as much as if you're driving from 1 to 2 in the morning or something like that. And of course, you can imagine just with more drinking and driving going on around those times, and a lot more risky behavior associated with people that are up that late, that you know, it makes sense that this should impact our policy premiums. So all these are fine because the score is calculated based on the incidences divided by the total miles that you travel, regardless of whether you're driving yourself or you're using FSD. But what I meant about being unique for me, or a little bit different from others, is I try to drive as close to 100% on FSD. And I was doing that even when I was trying to just get into the beta. I was driving you know, as nearly as I could to 100% using autopilot. Now, the problem with that, though, is if you ever have any issues that happen while you're not on autopilot, then if the denominator isn't total miles, but it's non-autopilot miles, then these have a really outsized impact on your safety score. So one of those is unsafe following. So if your follow distance is what it deems to be too close when you're driving over 50 miles an hour, then you'll get dinged with unsafe following. But the problem is it's not always under your control what that follow distance is, because people can come in from other lanes and it's going to ding you that way. So best way to avoid that is to be on autopilot as much as possible on the highways, which, hey, you know, it's safer anyway. So that one's not too bad. And, you know, I got a lot of experience with all these different factors and how the safety score works, because now that I have Tesla insurance and I saw my premium go up as my safety score got hit by some of these things, then I wanted to figure out how to get that safety score back up and get that premium back down. So I did do a little bit of highway driving off of autopilot, just in order to you know, be driving over 50 miles an hour and keeping a safe following distance. And just by adding more miles into that denominator of the non-autopilot miles, then I was able to get my safety score up a bit that way. The next factor that's kind of funky is hard braking. So this is defined as the amount of time, percentage of time when you're braking, that you're braking really hard. So again, the denominator is not all miles, it's just the braking miles. And so the only way to get this down is by doing a lot of light braking. which is a weird thing to do. So you just kind of like, lightly tap on the brakes, and then that increases the denominator here. And then if you have this like excessive hard braking issue, then you can get that one back down too. So this is kind of comical, and I think you can see here that this is where I think there's a major flaw with the safety score, is that these metrics definitely could use some work because it's just too silly, right? The way that we go about trying to improve them. And again, if I was just driving completely not on autopilot, there wouldn't be many problems, but then it would be really unsafe, right? Tesla puts out its own metrics that driving on autopilot is much, much safer than not driving on autopilot. And then the last one, and this is the one that really impacted my score. I think I had a 98 safety score. And I got some kind of an issue when I was driving home using FSD beta, and I did a 2 scroll wheel reset while I was driving. And I don't know how this happened, but somehow that translated into later on some false collision warnings showing up. These forward collision warnings really, really impact your safety score, which makes sense because the system thinks that you were nearly, or you were approaching, the chance of a collision, an accident. And so, of course, these should be heavily weighted. But again, the problem here is the denominator is not all miles driven, it's only non-autopilot miles driven. So I had to go out there and drive a ton of miles, not on autopilot, in order to get the incidence rate of these forward collision warnings per mile down to a manageable level. And it made a big difference. I think when my safety score initially fell down into the 80s, it went down to like 85 or 86 or something like that. My premium went up to nearly $200 a month. Just by getting my score back up to 95, having learned all this stuff and done some research and figured it out, I've been able to get my premium actually back down below the previous month's premium. So I saved quite a bit here. So I think the positive part here is it does incentivize you to drive more safely because you know you'll be saving money. However, the problem is that it disincentivizes use of autopilot because it's not using those autopilot miles as a denominator in the calculations for the other things. And so then you have to drive non-autopilot miles in order to fix the issue. So that's really, really dumb. And I think it's the major flaw right now with the methodology. I think it would make a whole lot more sense just to make all of them across the board be divided by total miles, regardless of if the car is, doing all the inputs or if you are. All in all, though, I have to say that I am happy with Tesla Insurance, especially now that I figured out how to do this and keep my premium under control. Hopefully I'll never actually have to file a claim. That's when you really find out how good your insurance is. But I will say that in terms of usage, the statistics and all of the access and even filing the claim, all this stuff would be all done through the app, which is really, really nice. It seems like how competitive the premiums can be can really, really depend. So I'd be curious to hear about your experiences in the comments below. Let me know if it's affordable in your state or not. And then if you're in California, what you think about this whole, not being able to use real-time statistics. So that's my take on Tesla Insurance. Hope you liked it. If you did, please hit the like button and consider subscribing. Thank you very much for watching, and I will see you in the next video.